fundamentals, as you know, commodity down cycle, one of the major casualties was FX and the way we managed our FX. And so with improvements in policy, especially with the introduction of the investor-exporter window, it made it easier for foreign portfolio investors to bring in money and take out money. Okay. Now, coincidentally, oil prices also started going up, and output improved with diplomacy from the federal government in the Delta region. So we had improvements in oil prices, improvement in output, domestic output, which meant that our intake was higher from an FX perspective. That was able to support the moderation of the challenges we were having in FX. And that translated into foreign portfolio funds, global emerging market funds, Africa funds, frontier market funds, testing the waters and seeing that, yes, they can bring in money and take out money, and then taking positions. So the recovery that we saw, if you did the analysis, you will see that a lot of the initial impetus was from the foreign portfolio investors. And then the domestic investors then came in and started taking positions. At the end of the day, domestic investor activity slightly surpassed foreign investor activity, 2017. We also had a number of things that were supportive of the rally that we saw. Ease of doing business numbers, great improvement, 24 places. Competitiveness, we were a little bit better than the previous year. The companies themselves, the listed companies, a lot of them posted profits. The banking sector posted significant profits in spite of non-performing loan overhang that they were having. The fast-moving consumer goods sector did very well. Industrial goods, very well. And so those are the things that when you add them together, you see a marketplace that is recovering. And don't forget, we're recovering from a low base because there was significant sell-off. In my opinion, we oversold. And then to put everything, a reality check, if you will, if you converted the 15 trillion that we are today, you will see that it is in the 40s, 40-something billion dollars. That is significantly lower than where we were when we went into the commodity down cycle in 2014. You know, we peaked at 84 billion US dollars. And even then, we did not think the market was overpriced. So people are seeing that in dollar terms, the Nigerian market is really cheap. People are seeing improvements in market efficiency. People are seeing improvements in crude oil prices that is accruing, and output that is accruing to foreign reserves. All those things give confidence to continue to participate in the market. Another thing to factor in is that a lot of the big funds don't move easily. They don't move money from one country to another country easily. They have to go through internal governance processes. Their risk manager, for example, must approve. And so a lot of them have been doing their studies and analysis, and perhaps a number of them are getting to the point where the risk managers are saying, okay, it's a good time to take the risk. And so, you know, we're seeing all of those things culminate in a market rally that to a lot of people is phenomenal. It is not the place of the exchange to try to sustain a rally. Our job is to create a marketplace that is efficient, that allows companies to raise money in an efficient manner, and that allows investors to find good companies to invest their money in. We think that if we continue to do a good job of that, we would have done our job. Now, if you want to sustain the rally, that has to do with policy. Right policies have to be in place. Conditions in the global markets, oil price conditions, and output, continued diplomacy in the Delta region, because our market is highly correlated to crude oil prices and output. Okay, so those types of policies, policies that will encourage domestic savings and investments, policies that will encourage deep investments in infrastructure and things like that, the market tends to reward those kinds of policies, and that will sustain the rally. But the exchange itself, our job is to have a marketplace that is efficient and solid for price discovery.